Hello, everyone. Hope you had a wonderful trading week amongst all the chaos in the marketplace. Let's go ahead and just jump right into it here with the dollar weekly time frame view. Ended up pulling back as expected here, down towards the 97.95. Looks like roughly. I think that we're going to go ahead and see a little bit of consolidation at this area in the near term, at least. And what I'll be looking for here is a little bit of a pop back up here, maybe test that 98.50 level again, and then ultimately start pulling back down and then dramatically start breaking down as rate cut expectations start to really take hold. So that's basically what I see here for the dollar in the near term. I don't think that we're going to see much more of the upside push here anymore. I think that pretty much the high should be in now as the rate cuts specifically, are looking to be more and more of a certainty and sooner than previously priced in. So dollar needs to break below that 97.90 level. Then we start looking at 97.50s, 97.40s. Break that level as well. Takes us down to around the mid fib, which is around 96.90. Chop around that area and then further push down towards that 95.95 level. So that's what I see for the dollar. Let's go along to gold, which also had a very crazy and hectic week. All right, so here's gold weekly, very, very strong reversal here after hitting basically just shy of 1700. It was around 1691 or 2, something like that, and then pulled all the way back down here. So let me just make this a little bit darker so I could see this going forward in time. There we go. So what am I looking for here out of gold? Firstly, I'd like to see a little bit of stability here. This has been a very large move, looking for some stability. Couple areas that I'm focusing on. Number one is the prior highs here. Can we hold along the basically the 1560 level? So 1564 is the previous high level. Beyond that, around 1560. That breaks down, then we're looking at retesting those 1540s, 1550 area, which is around that mid fib range here. If that breaks down, just to continue that, next major support levels are going to be around that 1500 level. And then we're going to need to see some consolidation here. Now, as far as silver is concerned, I would say silver, look for those 1554s. I don't usually cover silver in here, but it's a little bit easier to see where the bottom is for silver, and usually silver tends to bottom out before gold does, so it'll give us a good idea of where gold will be bottoming out. Some of you may be asking, what happened to make gold do this? Essentially, what we had was a lot of the folks, basically the funds that were expecting to see the indices pull back. So somebody maybe knew something, who knows, doesn't matter. The money was showing that it was going into the safe haven pretty aggressively. After the indices started crashing dramatically like they did this past week, you saw the liquidation of the safe havens as they were anticipating the bounce, causing stop outs along the way, and that's why you have such a big bearish reversal. Just got to think a little bit, just like the big money. What am I doing in the future? What am I doing right now? Etc. Etc. So they're planning ahead, just like you should be planning ahead. And that's why it's always a good idea to think like the smart money or the big money, fund money, whatever you want to call it. That's how you basically stay ahead of what the rest of the herd is doing. That being said, key levels again, to repeat myself, looking at those 1560s. If we break down below that, then we'll be targeting around 1540, 1545, 1550s, looking for a floor. And then after we find it, we can start talking about maybe resuming this trend to the upside again. For right now, need to see some consolidation after such a large move, number one. Secondly, nobody knows really what's going to be happening with this whole virus scare. The markets are trying to figure out the impact economically to global economic growth rates or lack thereof. So, that being said, take your time and wait for the dust to settle. When things start settling down, then you can start planning trades effectively. Beyond that, trying to play these swings, it can get costly on your stop outs, or you could just blow up your account. So, like I always like to do, wait for the clarity, and then you can start planning, measuring your risk versus reward, etc. So for right now, I'm just basically waiting for this to settle up. I'd like to see where the support actually will find its grounding. Like I said before, 1560 would be ideal, but I think that we're going to be looking at some more chopping here, and to further add to the chaos that we already saw this past week on Friday. China reported significantly weak factory output or growth, whatever it was that they put out. Again, I don't keep too close tabs on it. I just happen to see, the economic calendar that I monitor, a big miss to the point of like a 50% less than expected numbers, which again is really, really weak. So we'll see what happens from Sunday to Monday. Again, if you're not in, best to wait for the water and the picture to just clear up a little bit, and then you can start planning effectively going forward. So again, for right now, gold, it's been liquidated again, anticipating the bounce. It might get some pops here and get really, choppy. So we'll see exactly where she ends up bottoming out, and then we'll be able to plan accordingly from there. So those 1560s hold, then you'll be looking at 1570, 1580, and 1600 again will be, or 1595, excuse me, will be a pretty significant resistance point as well on the upside. So again, ideally you'd want to kind of consolidate along this level above the previous highs. So we'll see if we can get a nice floor put in right on that 1560 level. If not, then we'll get and break down below towards those 1540s, 1545s. Those fail, then I'll be looking at 1500. But I think that this is going to be a pretty decent area to focus on in the meantime. So we'll see what happens as time progresses. So let's go ahead and move on forward here. Moving along to crude oil. Crude again broke below even the areas that I was targeting around that 47.60, 48 area. Now we're looking at essentially a double bottom move here, which is towards that 42, 42.40, 42.50 zone. Looking out further in time, though, if things don't settle down at that level, then we have a further breakdown, and the next target levels are actually pretty far down there from here. So essentially, the target that I like to focus on is that 78.6 fib retracement, which is measured from the low to the highs here at around 77.30. So again, if we break below that 42.40 level, then you can pretty much just wait and see, or join the party to the downside, obviously, near that 37 to 36.80 level for the target to the downside. Upside is going to be fairly heavily hit, I guess I should say, or suppressed. In the event that we do get a little bit of a bounce to the upside, I would say, be very, conservative in your upside targets. Don't necessarily be overly greedy, just because when the bearish situation is so apparent, a lot of people will be looking to play the same move you are. So again, a lot of selling, not as much buying. There you go, lower targets, lower expectations. So that's what I see for crude. I don't really think that we're going to get too much here. I think that we're going to see at least those 42.40s get hit. Then might see a retest of around 45.72 to maybe a retest of around 48.67. But again, if we don't recapture this area, which it's not looking that hot overall right now, downside is still the move. And then if we break below this level, then you'll be targeting those 37s to 36.80s. All right, and lastly, we have natural gas here. Looking at the monthly time frame view, and like I said earlier, or I guess that was last week. I was actually speaking to my members about earlier in the week. But when I updated last weekend, I was saying, wait and see how this price action acts towards the latter part of the week, as this is finishing out that monthly candle for February. So, rightfully so, we ended up pushing down lower, couldn't sustain those 180s, and ended up closing pretty darn weak. Now we're essentially right at this low here. We have a little bit lower to go, around a 160 level. The way this monthly candle closed up, it just doesn't give me a heck of a lot of confidence that we're going to see a significant bounce off this level at this point in time. Now, some of you may be asking yourself, okay, well, if we're not going to be bouncing here, where are we going to be bouncing? And to that I say, just look at what crude's doing right now. Crude is also heading down to like that 42.40, 42.50 level that I just showed a few moments ago. Leads me to believe that we still have more weakness to come in natural gas as well. So I would say, keep your eye out for like the 150, 155 level. Could even go back down to as low as the 140s. I know it sounds crazy, but it's just what the price seems to be doing. Now, if you go back in time, or if I go back in time for you, since I'm the one that's driving this ship, come on, let's go. And that red dotted line is the current price level. So just so that everybody is aware of what that level means. So if you go back in time to like the 90s, I know it's a long, long time away, or from the past or whatever. But you can see that we did have a lot of price level support in here, and this information only goes back to around 1991, so I have to excuse that. This is a free service that you get from these people here, and so obviously that's all that this chart is going to load for me. That being said, here's that current price level. So again, a break of that, which again, that monthly candle does not look very convincing at this time. You'd like to see a nice, long wick to basically show that there is a concrete floor there that we can actually depend upon for a nice little bounce in the interim at the very minimum. Not likely at this point in time, given how we closed. Break those 160s, and you can pretty much bet you're going to have a lot of stops being taken out and more weakness coming. Like I said, 150 looks to be a decent number, but again, best to be more conservative and just wait for lower level prices, maybe as low as around 137.8 to 133. I know it sounds crazy. I've been sounding crazy to a lot of people for a long time, and I've continued to be right for a very long time now. Not tooting my own horn or building up my ego or anything like that. It's just following what the price is showing me, and I'm just saying what I'm seeing. So again, 150 is a good level to keep an eye on. 1479 to be more precise. Again, if we do get a wick smack, wick smack to the downside, you'd be looking at around 140, low 140s. Okay, so if you're not in and you're just waiting, continue to wait. Like I said, just wait until the water kind of clears up a little bit. It's really, really murky out there across the spectrum. It's not just what it's been for the past 10, 11 years, both in the energy sector and as well as the general stock market indices. Things are just getting crazy. If you're not new to this, if you are new to this, best to just wait until things kind of become clear. Because if you get in early and you're, let's say, newer to the market, you're going to get absolutely clobbered. It's just the way it works. I've been in this field for some time, and I myself am being more and more patient with this market the way it is right now. I would highly suggest that you do the same. Just a tip from somebody that's been around for a little bit now. Patience does pay, and it does save your account. Instead of having to continue to buy on the dips and just continue to get stopped out, just wait until you hit that solid floor where it just goes, it just smacks everybody in the face going, how can we possibly get any cheaper? Like if natural gas plunged down to like a $1.15, for example, everybody, including probably myself, would be just picking up whatever we could down here because eventually it's going to snap back. Now, I'm not saying that I would stick around. I mean, I would just play the bounce from 115 to let's say 150 and just call it a day. Maybe let a little bit run, maybe let one contract run, and then that's it. Take the guaranteed money and move on with my life. That's just how I work. You know, everybody has their own plan, should have their own plan, both risk management as well as strategy. So both are supposed to be one, but I do have to say that a lot of people unfortunately lack the risk management portion of it. So again, if you don't want to be a bag holder, don't be a bag holder. Use a stop loss. It does save your account. Now, some of you that I've heard from in the past, few months, we're holding from up into the mid two area to the higher two area. I do feel for you, but there's really nothing that can be done. This is a industry where you basically reap what you sow, just like in general life. You have to protect yourself at all times and always be of the mindset that you do not have any guarantees. Just like anything else in life, there are no guarantees. Best thing you could do is just identify a situation that has a higher probability setup. Obviously, with market conditions right now, things are a little bit crazy. It's difficult to gauge exactly where floors are and how strong those floors are. So, again, just have to have a solid plan in place. I can't stress it enough. I don't like seeing people lose money. And in these conditions, you can bet there's a lot of accounts being blown up. A lot of people were max long on indices, and they just watched their retirement accounts go, down 30, 40%. I'm assuming. Don't know, obviously, the reality and exact numbers, but, greed kills. And that's all I can really say. You have to protect yourselves and just be smart about what you're doing. Especially in this market, it's better to be, like I always say, it's always better to be late, just a little bit late, and to the right party than it is to be early and there is no party. and then you're just losing money. So just try to remember that. Just a couple words of wise. I hope that everybody has a very green trading week ahead. We have a new month ahead of us here with more chaos to start off the week here with China's weak numbers, and then I imagine we're going to see a trickle effect across the other numbers from other countries, and we'll just have to take it one step at a time. Also, I will be going away in the coming weeks, and as I said before, I will be putting that information in the discussion section of my channel. So, other than that, I hope you all have a wonderful and green trading week. And again, remember, patience does pay.